Everyone dreams of owning a beach condo in Florida. But what if I told you that dream is a financial nightmare? In this video, I'll show you what realtors won't. And by the end, you may never look at beachfront property the same way again. Buying a beach condo in Florida sounds like a dream. Sunshine, ocean views, passive income. But here's the truth no one is telling you. It's not a dream. It's a money trap. I've lived in Florida for over 20 years, and I've visited every coast, every condo, and every so-called paradise. I've watched countless people make the same mistake. They buy into the beach lifestyle, but they don't buy into the reality. Today, I'm pulling back the curtain on the real cost of owning a beach condo in Florida. Everyone thinks condos are easy money. Buy one, rent it out, retire rich. That's the dream. But in 2023, Florida passed a law that changed everything. It's called Senate Bill 4D. It requires all older condos to pass structural inspections. If they fail, owners are forced to pay for repairs, and those repairs can cost tens of thousands. These aren't optional. You don't get a vote. You get a bill. Let's say you buy a condo for $400,000. Seems reasonable for beach access, right? But here come the fees. HOA dues, $700 per month. That's $8,400 a year. Insurance, $4,000 a year. Flood coverage, add $2,000. Windstorm insurance, $1,500 more. Property taxes, $6,000. Now you're at nearly $22,000 a year just to keep the lights on. That's before repairs. And before the dreaded special assessment. Let's break down an actual listing. 2-bedroom condo in Clearwater Beach. List price, $525,000. HOA fees, $875 per month. That's over $10,000 per year. Flood insurance not included. Special assessment warning already posted in the listing. Structural roof work scheduled. Estimated cost per unit, $24,000. And you haven't even moved in yet. You don't fully own your unit. You co-own a building. And the HOA controls that building. Want to rent it short-term? You might need board approval. Want to renovate? Denied. Paint your door the wrong color? Fine. HOAs can raise fees, limit access, and worst of all, they can foreclose on you. No court, no hearing, just a lien and a letter. It happens every day. Florida gets hit by hurricanes. That's not fear-mongering, it's math. 2023 had 8 named storms. 2024 is already active. Insurance companies are leaving. Those that stay, they're charging double and requiring deductibles as high as 5% of your condo's value. That's $20,000 out of pocket before coverage even kicks in. Many buildings are now uninsurable, and you can't get a mortgage without insurance. So you're stuck or bankrupt. But I'll Airbnb it, they say. That used to work. But now, Airbnb bookings are down 18% in Florida. Too many units, not enough tourists. You're competing with hotels, resorts, and other desperate owners. Your HOA might ban short-term rentals altogether, or limit to 3 times per year. Your dream of cash flow? Gone. Like the times we had low interest rates. Now you're just bleeding money from everywhere and begging for bookings. People love saying real estate always goes up. Not condos. Nope. Condos rise slower than houses and fall faster during downturns. They're harder to finance, harder to customize, harder to insure, and much harder to sell, especially if the building has damage or fails inspection. Buyers get scared. Lenders pull back. Prices plummet. Look at what happened after the Surfside collapse. Entire condo markets froze. Listings sat for months. Some never recovered. So what's smarter? Buy a single-family home. No shared walls. No surprise fees. No HOA dictating your life. Or consider a small multifamily inland. Better cash flow. Lower insurance. Higher control. And if you love the beach, rent. Let someone else carry the risk. Your wallet will thank you. Remember when beach condos actually made sense? In the 90s and early 2000s, prices were low. Insurance was affordable. HOAs were reasonable. You could buy for $200,000, rent for $100 to $800 a month, and make real profit. But those days are gone. Today, prices are sky high, but returns are shrinking. And risk? That's the only thing going up. Here are the top 5 hidden money traps condo buyers never see coming. Number 1, special assessments. They come out of nowhere. Number 2, mandatory structural repairs after inspections. Number 3, insurance deductibles the size of car loans. Number 4, HOA restrictions that destroy rental income. Number 5, poor resale value when the market slows down. One of these is bad. All 5? That's a financial disaster waiting to happen. Here's what happens when your condo building fails a 40-year inspection. Step 1. The city issues a violation notice. Step 2. You have 1 year to fix everything. Step 3. The HOA hires engineers, consultants, and contractors. Step 4. You get a bill. Not an estimate. A bill. For your share. $10,000, $25,000, sometimes even $100,000 per unit. And if you can't pay, you either sell at a loss or they put a lien on your property. Let me read you something from a Florida real estate Facebook group. Just got hit with a $38,000 special assessment. Thought this was supposed to be passive income. Another one. HOA voted to ban all Airbnbs. Now I can't rent my own place. I'm losing $1,500 a month. Reddit has hundreds of posts like this. Real people, real money, real regret. Realtors aren't required to tell you about pending special assessments. They're not required to warn you about insurance hikes. They can't predict how your HOA will behave next year. But you know what they can do? Collect their commission and vanish when the roof starts leaking. It's your responsibility to investigate the financial health of the HOA. Ask for the last 3 years of meeting minutes. Ask about reserves. Ask about deferred maintenance. Because the information is there, but no one hands it to you. So why do people still buy these condos? 2 reasons. They don't know what they're getting into, or they think they'll beat the odds. But real estate is emotional. People fall in love with the ocean view. They imagine margaritas, not insurance forms. They think about summer memories, not mandatory roof replacements. By the time the first hurricane hits, it's too late. A couple in Daytona bought a beachfront condo in 2021. 3 storms later, they got a $42,000 assessment. They couldn't afford it. They had to sell at a $60,000 loss. In Naples, a retiree bought a 2-bedroom unit near the pier. The building failed inspection. Her share of repairs? $88,000. She drained her savings and still had to walk away. These aren't rare stories. They're warnings. Let's do the math. Annual rental income, $35,000. HOA fees, $8,400. Insurance, $6,000. Taxes, $6,000. Repairs and vacancies, $4,000. Net profit, maybe $10,000 on a $400,000 investment. 1 storm wipes that out instantly. 1 special assessment erases your year. This isn't passive income. It's a passive disaster. In 2024, condo inventory in coastal Florida is at a 10-year high. That means more listings, fewer offers, and more owners trying to unload before hurricane season. Experts predict insurance premiums will rise another 20% in 2025. Florida's Office of Insurance Regulation has already warned about market instability. It's not just a rough year. It's a long-term trend. So what's the bottom line? If you love the beach, go rent a place for 2 weeks. Take the money you saved on HOA fees and buy fresh seafood every night. But don't let the dream of oceanfront ownership sink your finances. Because when the storm hits, literally or financially, you'll wish you had listened. Comment below if you've had experience with condo nightmares. I want to hear your story. Subscribe for more financial truth. And turn on the bell, because next week, we're covering the 3 Florida cities everyone is fleeing, and the small towns they're moving to instead. This is Smart Money After 40. And we're just getting started.